Hi, it's Larry Gaines, Power Cycle Trading. I wanted to show you the last trade of my progression of swing trading on Google using weekly options. The trade that I put on, the fourth trade on Google, if you've been following my previous videos, I put on June the 6th, let's see, right here. I entered the trade actually on June the 7th, right here. This is on the NASDAQ, but I'll show you the trade in a second. First off, though, I wanted to show you that the NASDAQ, has been really trending lower here. So, for Google, obviously, you want the trend, the overall index or the broad market trend in your favor. So we did a number of shorts, when the market was starting to roll over, and then the last trade I did was a long. But you can see the NASDAQ is still, trending lower, and Friday. Had an inside day, but came off pretty hard in the last hour or so of the trading. So that being said, let me show you how the Google swing trade ended up. So here's a review. The first trade was right here, and that trade was put on the, let's see, trade was made on the 16th of May, and it was a short. Got out here, it's a profitable trade. The second trade came on the 13th of, the 20th of May, excuse me. Went short and covered down here. The fourth trade, or the third trade, was put on the 3rd of June, shorted, covered right here, and then went long on the 7th of June, a long vertical ladder call spread. So, and that was taken off yesterday, Friday, towards the middle part of the day, when the Google started trading back below 880. And I'll show you why I took it off and how I managed the trade. So here's the trade that I set up. This was on the 7th of June. It was a vertical bull call ladder spread, and this is a weekly option spread that I like to do to take advantage of time decay. So I put on the 875 880 call spread, long the 875, short the 880, and I put that spread on at 795 and sold the 880 at 560. So I had the spread on at $235 per contract. That was my max risk capital exposure when I did the vertical spread. Spread value is $500. So the max potential on that spread was for this option spread to close. Wanted Google to close over $880 on the 14th. It was a weekly option that expired Friday, yesterday. So I would have made the maximum profit if it had closed at 880 or higher. I would have made $265 contract, or 113% return. What I like to do is sell additional legs to take advantage of the time decay. So I sold also the 910 calls, same amount, leg per leg, and I collected $60 a contract. And then on the 10th of June, which was I believe Tuesday, I sold the 915 call, another leg at 80 cents. So basically what happened was Google was kind of going sideways, having trouble momentum, and there were some negative stories out, so it was losing some momentum, going sideways. So in order to manage the trade, if you sell some additional premium and you have time decay, that's going to go in your favor and benefit your trade. So basically I am long, but I hedged it with having some other legs short against it. So what happened on expiration on the 14th, yesterday, Friday, I ended up legging out of the spread, because you could see from the chart, let me pull that back up, when the market opened up, it looked really good early. It was over 880, so that's where I want it to close, above 880. But then as the day went on, the NASDAQ started weakening, and everything started, to lose momentum. So I did not want to have this thing totally fall against me with the NASDAQ coming off. So when it passed under 880, I legged out of the spread using our trading model to help me time the legs for exit, and I'll show you then exactly what happened. So that's one of the beauties of options. You can have the option to leg out. So I legged out, so I sold I was long the 875 calls, I sold those. I bought it at 795. I was able to get out at 410, so I lost $385 contract. Then I was short the 880 calls, so I legged out of that leg when it was the appropriate time based on my model, and I got out and I covered that back in. I bought it back at $95 a contract, or 95 cents, so I made $465 on that leg. Then I was short the 910 calls at 60 cents. Those expired worthless. The 915 calls were short at 80 cents. Those expired worthless. So when you total up this whole spread, the outcome was $220 per contract. So if I'd left the spread on and it expired worthless, I would have lost $235, but by managing the trade, I was able to make $220 by using weekly options. So in summary, this progression of Google weekly option swing trades made a total of $922. The first trade 1 made $410 contract. Trade 2, that was put on the 15th, taken off the 17th. Trade 2 put on the 20th, taken off the 24th. So these are short-term trades. You've got, 2 days, 4 days, 3-4 days. Each of these trades are fairly short, which is good, so you don't have a lot of exposure. $290 on the second trade, $2 on the third trade, and the last trade made $220. So for total cumulative profit, gross profit per contract of $922. And remember, one option contract is equivalent to 100 shares, so this is based on a one option contract cumulative. So this is swing trading using weekly options, and I'm going to have a boot camp to go into all the details and specifics of this. And if you're interested, please go to the link on this email, and let me show you some of the benefits and particulars of this boot camp coming up on Saturday, June the 22nd. First off, here's some questions to ask yourself, and this will tell you whether or not this boot camp will be something for you. So, is your short-term investing system working for you currently? Would you like to learn a systematic approach to trading? Would you like to improve your current trading or investing methodology? Are you too busy to find time to learn a trading system or a short-term investing model that works for you? Would you like to be coached and mentored by a professional trader that probably has many more years of trading knowledge and experience than you? Well, if any of these questions that I propose to you strike home to you, then you should join me for the Power Cycle boot camp on swing trading. Now, this boot camp is going to be a 4-part live internet course that covers my step-by-step trading method for swing trading futures, stocks, ETFs, and weekly options. It's going to be live and recorded, and it'll begin on Saturday, June 22nd at 10 a.m. Central, and it'll run till 4 p.m. Central, and I usually go over because there's a lot to cover. Then there will be 3 60-minute follow-up support webinars for questions and answers, and the first one will be the following Thursday, June 28th at 6. So the entire event will be recorded, so you'll have all 9 hours, you'll get the PowerPoints, and then you'll get your choice of one of the Power Cycle trading models, plus much more. Now in this package, this boot camp package, you're going to get your choice of the Power Cycle trading model. So we have 3 different signature courses that you get to choose one of. You'll get the 6 hours of the interactive training with me. You're going to also get 3 months membership to our Power Cycle Daily Aftermarket Outlook. You'll get 1 month free in our virtual trading room. You get option trading made simple, and then the 3 follow-up live webinars, plus all the downloadables, email questions, everything. So it's a great package. The total with my time and everything included is well over $3,000, and we're making this a special offer right now of $897, and for right now, for limited time, you can do it to pay. For limited time until this Tuesday night, there's a to-pay option you can get for $497. So it's going to be a great boot camp, lots to cover, and we're going to really go into how to use weekly options for swing trading. So I hope you'll join me, and I look forward to seeing you next Saturday. Now here's the URL. It's also on the email that was sent out, but it's powercycletrading.com BC Swing Trade 2. Hope to see you next Saturday, June the 22nd.